The Allan Australia Opportunity Fund aims to provide investors with long-term returns that exceed the RBA cash rate, but with less volatility than the Australian share market. I'm Natalie MacDonald for the Finance News Network. Joining me now is Allan Australia Opportunity Fund analyst Dan Abeshouse. Dan, welcome back to FNN.
Thanks very much, Natalie. Glad to be here.
Dan, can you start then by introducing the fund?
Allan Australia manages about $3 billion on behalf of our clients, and the Allan Australia Opportunity Fund is a fund that invests in cash and ASX listed companies with a minimum of 50% cash at all times, up to 100%, depending on the opportunities that we see in the share market. And the idea is that it'll have less volatility than a fund that's fully invested in shares, which may suit people who are closer to retirement, who are looking for a better return than cash, but without the volatility and short-term risk that the share market might present.
So what is the fund's current allocation to cash and equities, and how has this changed over the course of 2015?
The Allan Australia Opportunity Fund currently has about 30% of its fund invested in shares and the remaining 70% in cash and term deposits with the big four banks. And the reason we're at those levels at the moment is that there are some interesting opportunities, but we're not at our 50% level because we don't think that the market is completely depressed. We're not at zero because we don't think the market is completely overvalued. And the shares that we're interested in at the moment tend to be, as with our equity fund, shares that are out of favour, and often those are the ones that present interesting long-term opportunities. At the moment, that means companies like Woodside Petroleum, Origin Energy, and Metcash.
So the fund's allocation to equities has been increasing recently. Do you expect to continue to increase that allocation over the coming year?
It's always hard to say, and it really depends on what the market does. If the market turns down for some reason and very interesting and attractive opportunities present themselves, then we would expect it to increase our exposure to shares. But it really is dependent on the circumstances as they present themselves.
So Dan, what is the longer term performance track record?
The Opportunity Fund has been offered in Australia since 2011, and since that time the fund net of fees has produced about a 6% return versus the benchmark, which is the RBA cash rate. The return since that time was 3%, so that's a 3% outperformance of that benchmark since the fund was offered in Australia.
Lastly then, Dan, who is the fund suited to? Who should invest in this fund?
The Opportunity Fund is suited for people who would like a better return than cash, but don't want the volatility of being fully invested in the share market. And so the combination of cash and shares, we hope over time will provide a superior return to cash, and our targeted investments in equities that we pick will hopefully provide a better return than the share market overall for that portion of the fund.
Dan Abeshouse, many thanks for the update.
Thanks very much, Natalie.